It is August 25th, 2026, and the global petrochemical feedstock market is opening with unusual price stability across all major trading hubs. Before the trading day begins, market players check the Morning Polymer Bazaar daily report to see if any new momentum has entered the manufacturing supply chain. Naphtha and propylene report no change across Japan and Europe, while U.S. Gulf Coast propylene trends down at 40.10 cents. Similarly, ethylene trades lower in the U.S. at 25.15 cents, while Europe and Northeast Asia remain static. For traders, a lack of price movement often means narrowing windows for traditional arbitrage, requiring much more specific data to find a viable entry point. However, looking further down the report toward the Asian market listings, the data deviates from this quiet trend. When the majority of the market is fixed, a sudden, sharp price movement indicates a specific physical event in the supply chain that requires immediate investigation. Downstream products are largely following the quiet upstream trend. In China and Korea, PTA has dropped by $10 and styrene is down $5. But monoethylene glycol, or MEG, is moving in the opposite direction. It has risen by $30 to reach $775 per metric ton. This chart highlights the disconnect. While PTA and styrene are trending down by $5 and $10, MEG shows a $30 increase, effectively moving against its immediate market neighbors. Since the raw materials used to make it are getting cheaper, this specific price increase in MEG suggests a localized disruption rather than a broad market shift. Typically, when raw material costs fall but a specific derivative rises, the cause is a sudden production bottleneck or a shift in immediate regional demand. This type of movement often points to a specific physical cause, such as a localized plant outage or a delay in regional shipping schedules. A $30 move in a single day can change the cost basis for regional downstream producers, potentially affecting those who source their polymers from these specific Asian hubs. Identifying the cause of the MEG surge allows a trader to understand the supply constraint before it begins to influence other connected markets. Tracking these conflicting data points manually across multiple regions is difficult, especially when a single price change like MEG requires immediate cross-referencing against upstream naphtha. The Polymer Bazaar AI-powered WhatsApp chatbot is designed to help with this, providing instant access to these specific price divergences. By messaging the word feedstock to 919374624365, users receive a reply within 5 seconds containing the most current global price updates. This allows traders to use algorithmic alerts to turn raw market data into a specific plan of action. Traders who identified the $775 MEG spike early were able to adjust their sourcing strategies while the broader market was still processing the morning's report. This illustrates how accurate price data leads to a reliable prediction, which then supports the ability to generate profit. To access these updates, use the WhatsApp bot, subscribe to the channel, and hit the bell icon to stay notified of the latest market shifts. When global benchmarks remain fixed, identifying these specific price deviations is what allows a trader to act, while the rest of the market is still waiting for a trend to emerge.